Jeff Bezos, being the world's richest man, has a net worth of $190 billion. What if I told you he might hardly have $1 million in his bank account? Then where is the $190 billion? The answer is simple. He owns 10.3% of Amazon shares, which is worth $190 billion. He can enjoy those money only if he sells his shares. This is true for almost all billionaires. In this video, I will be talking about what is stock market, how to invest in stock market, etc. Make sure to like this video and subscribe to Code Center now. Without further ado, let's get started. First of all, don't get confused between share market or stock market. They are technically referring to the same thing. A group of shares can be called as a stock. Before knowing what is a stock market, you need to know what a stock is. Again, share market is a vast area of study. I will try to keep it short and simple. Let's say A and B are starting a company. Both are investing 50,000 rupees each on it. So the company is now worth 1 lakh. And A and B both owns 50% of that company. Because they invested 50,000 each, right? Okay, now assume that the company is running smoothly and generating profits. This profit will be shared among A and B equally, because they both owns equal percentage of shares. Now seeing the profits A and B are enjoying, X wants to own a part of that company. That is, he wants to invest in that company. In other words, he wants a percentage of shares from that company. Now X contacts A and B and made a deal to pay 50,000 rupees for 20% of that company. Now let's say A and B both gives 10% of their shares to X. Now A has 40% of shares, B has 40% of shares, and X has 20% of shares. Now what happened? Since X bought 20% of the company for 50,000 rupees, the net worth of that company is now 2.5 lakhs. How? If 20% of that company is equal to 50,000 rupees, then automatically 100% of that company must be equal to 2.5 lakhs, right? Okay, now why should he pay 50,000 rupees for 20% of that company, where the initial investment of A and B is 50,000 rupees each for 50% of that company? The answer is simple. He knows that the company is generating profits, and hence X is basically investing in that company. He is hoping for a return on the investment he made. Now what happened to the shares of A and B? They both have 40% shares each, which is now equal to 1 lakh rupees. Initially, they had 50% of that company for 50,000 rupees each. Now 40% each, which is valued to 1 lakh. Their investment had doubled. This is the main part you have to understand. In case if you can't understand, watch this video again. Okay, what I just said is for the newly started company. As the company grows, the percentage of shares per person decreases, but the value of their shares increases. Why? Because as more people invest, the net worth of that company increases. For example, Jeff Bezos owns only 10.3% of shares of Amazon, which is in turn backed by thousands of investors. Similarly, Elon Musk owns only 22% of shares of Tesla. Now from this, you might have got a rough idea of what are shares. Shares are nothing but owning a portion of the company. Till now, we have discussed about the percentage of shares. Now let's talk numbers. Each percentage of shares accounts for millions of shares. When I said Jeff Bezos owns 10.3% of Amazon, he owns approximately 51.7 million shares, which is why he is the majority shareholder. So how are these numbers calculated? It depends on the company. Let's say a company's net worth is $1 million. If they decided to issue only one share, then that one share is equal to $1 million. If they decided to issue two shares, then each share would be equal to $500,000. Similarly, if they decided to issue 1 million shares, then one share will be equal to $1. Got it? So the more the number of shares issued, the less will be its value, depending on the net worth of that company. Till now, we have discussed only about what are shares. Let's say I have 5 shares in a company, then I can simply say that I own stocks of that company. That's it. Now, what is stock market? The stocks we talked about earlier are of huge numbers. In the previous example, A, B and X invested directly in that company. Similarly, giant companies like Amazon or Apple have a board of directors who had invested in large amount. Say, if they have to take a decision, majority of these people should agree with that decision. Now what if general public like you and me want to own a part of that company? That's where stock market comes into play. Different countries have different stock markets. In India, there are 2 stock markets, namely NSE and BSE, National Stock Exchange and Bombay Stock Exchange. Let's say a company is making hundreds of crores every month. Then it can go public. That is, they can list a small portion of their company in these markets. Again, it is not mandatory for any company to be listed in these markets. And also, not every company can be listed in stock markets. Of course, the company needs to satisfy certain requirements. Let's say a company satisfied all these requirements and decided to go public. Then it needs to file an IPO, which is nothing but initial public offering. As the name suggests, it is the initial price of its shares that the company wishes to offer to the public. Again, discussing everything about IPO is beyond the scope of this video. All you have to remember is that when a company files for an IPO, it plans on selling its shares to the public, which means general public like you and me can buy its shares. Once the IPO is over, the company gets listed in the stock market. In case of India, it is NSE and BSE. Now we can buy its shares from these markets. Now how to buy these stocks? You can't directly buy those stocks from the market. For that, you need brokers. You need a demat account to buy shares from the share market. You can start investing in stock market using apps like Grow, Zerodha, Upstocks, etc., which makes your work easy. I would prefer Grow because it is easy to set up, offers you more information, charges very less commission, and has zero account maintenance charges. If you want to invest in stock market, then you can install the app from the link in the description. Now comes another question. Why should I invest? What's the need of buying shares of another company? What am I getting back from it? Let me tell you one thing. More than 55% of US population invest in stock market and less than 5% in India. It is because of the absence of financial literacy. In India, investing in stocks is considered to be gambling. Okay, again, why should you invest? As I said earlier, as the number of investors increase, the price of your shares will also increase. Let's say you buy 100 shares of Zomato for 10,000 rupees, assuming price of one share is 100 rupees. Now let's say the share price of Zomato becomes 105 after 2 days. Then if you sell your 100 shares, you will be having 10,500 rupees. That is a profit of 500 rupees in just 2 days. Again, you should invest in the companies only you think is profitable. The share price may also decrease depending on your investment. Okay, now let's discuss why people consider investing in share market is risky. For this, you need to understand the ways you can buy stocks. There are two types, intraday and delivery. If you buy shares from intraday, you need to sell those shares within the same day before your market closes. If you think the price will increase today, you can buy it. It is highly risky if you don't know what you are doing. In case if you know a company is profitable in the long run, you can buy its shares under delivery type and can hold it for months or years. For example, the share price of MRF is just 11 rupees in 1993. Let's say you bought 100 shares of MRF in 1993 for 1100 rupees. The share price of the same MRF is now worth 77,000 rupees. If you sell your 100 shares today that you bought back in 1993, you will be getting a profit of more than 77 lakhs by investing just 1100 rupees. That's the power of investing. That's it guys. Let me end this video by saying if you know what you are doing, then it is not risky. If you have come this far and find this video useful, then please do like this video and subscribe to Coach Santa and share this with your friends. It might be useful for them. Feel free to connect with me on Instagram.